Good afternoon where you are. It's still morning here. I am here in this breakout room to answer any questions you might have about the InvestEU equity product managed by the European Investment Fund. I'm aware that I have a tendency to talk quite fast, so don't hesitate to tell me to slow down, and I'm happy to take any questions you may have. Please go ahead. There's only 5, 6 of us here, so just jump in.
Good morning, everybody. Thank you very much for the pretty much interesting session so far. I would like to ask you, is there any differentiations according to the sector of the company or idea the company is willing to implement, and different funds? Of course, there are funds for the different stages of the development of the company, but is there something sector oriented, and how we can find? I'm a Veselin from Bulgarian Industrial Association. We consult, also part of Enterprise Europe Network. We consult a lot of companies. Sometimes it is difficult for us to find appropriate venture capital fund or other debt instrument which could match the interests of the company. Thank you.
Okay, so under InvestEU, obviously the European Investment Fund only invests in funds under the equity product, and the debt product invests in debt, well, does debt guarantee contracts. Now, when a fund applies to me, to us, for an investment, we become a limited partner if we choose to invest. And when they apply to us for investment, they must apply under one of the verticals that I described earlier. So the 4 products were Capital Markets Union, Enabling Sectors, Digital and Cultural and Creative Services, and the Climate and Environmental Impact. And then there's a separate social impact fund and climate and infrastructure fund. And all of these things, all of these products, when you apply under one of these products, we give you money. If you pass the due diligence, we give the fund money to invest in companies with money from that specific product. And as a consequence, inside the contract that we will sign as an investor in the fund, we will impose on that fund a requirement that they invest what we call a minimum allocation of their funds under management into companies that are compliant with that strategy. So if the strategy is enabling sectors, then that's going to be things like semiconductor chips, semiconductor technologies, space, defense, and life sciences. And so they're going to be constrained. And so the funds that have invested, that have received money from us as a limited partner, have that constraint under InvestEU in their contract. So if you're a company or you're consulting for companies looking for investments under InvestEU, then you need to find the funds that have strategies that are coherent with that investment. But we, the European Investment Fund, do not invest directly in companies, and therefore we can't really help a company looking for funds. There is a place on our website, on the front page, if you go to eif.org and you look at information for SMEs, under there's an option to find the list of funds that we've invested in the past. And so you have a complete list of all the funds we've invested in and what sector they're in and what geography. That's a good starting point if you're looking for financing. But we as an institution do not help SMEs find financing directly. We provide funds to private equity and venture capital funds.
Thank you very much. This is clarifying everything I was interested in. Thank you.
My pleasure. Any more questions or something I should repeat because I went too fast the first time? Happy to do that too.
Hello, my name is Miss Andreeva, and I'm also from Bulgaria. And I'm working in the social sector. I live in one of the biggest cities in Bulgaria, and unfortunately here the social services are very low. I especially work with disabled children, disabilities like autism and everything from this spectrum. I saw in your expose that there will be an option to ask directly questions to some of your lectors, which are more aware of this area, like Evita Agaliano. Is how this is possible to happen, or you will answer all our questions?
You mean questions to who? I didn't quite catch that. You want to ask questions to the EIF about social impact products?
Yes, exactly.
So I can give you I can give you general guidance as to where to find the information online and how to apply, but only for funds, right? So
yes,
again,
I understand that. Yeah.
Good.
Okay.
So if you is this something I can do? Can I share my screen? I think I can. Give me 1 second and I will just show you.
Okay.
There we are. So if you go to eif.org, that is our website. If you look on this third column here, so this area here, calls for expression of interest, you're looking for InvestEU equity products, which is my section here.
Okay.
And that brings you here. And so you see that social impact is here, falls under the equity product. And when you go down here, you will find the call for expression of interest. You will find all of the different contractual terms. This is where you click if you want to make an application, and it takes you to an online application form that you have to fill out. I suggest you do that after you've read everything. And this is a 10-minute process if you have all the information. And then you have this section down here that says read more online. And this is what we call the folion internally. And if you look on here, this has a lot of information. It's basically a brochure, if you will, an interactive brochure. And here you have the social impact information. What we do, how we do it. So this is where I would suggest everyone who is interested in our equity products go, specifically this folion section. So this area here, InvestEU, read more online. This here is where we have the most carefully written information. You see, InvestEU is a very complex product, and as a consequence, we've had to do a lot of work to make it understandable from the outside. If you start with the term sheets, you'll find it very confusing, but if you start with this, then it will help you understand the term sheets, and then once you've understood that, you can apply, and that'll make things much easier.
Okay, that explains a lot. Okay, thank you very much.
So I see we have some new people. My name is Nicolas de la Vallée-Poussin. I work for the European Investment Fund as a senior officer working on equity products under InvestEU, and I'm happy to answer any questions or repeat anything that was not clear from the earlier presentation.
Hi, Nicholas. Stanimir Stirov here from the Coral Group in Bulgaria.
Hi.
I have a question about the geographic focus of the funds that you're looking to invest in, particularly in the growth and pre-IPO space. Is there sort of a focus, and do you prefer regional funds or just country-specific ones? And also maybe a third aspect is, if you're looking at regional funds, non-EU countries, would that be kind of a no-go if we consider, let's say, Serbia, North Macedonia?
Okay, that's a good question, because it looks obvious and then it turns out it's a little more complicated. So obviously, as a general rule, InvestEU is about investing in the EU. So we have a primarily EU focus, but that's not an absolute limit. What we have is something we called the minimum eligible allocation, to use the technical term. And the minimum eligible allocation states that if we give your fund, for example, 20 million, then we expect 40 million to double what we gave you, or capped at a maximum of 80% of your fund to be invested inside the EU. In what we call eligible final recipients. So there is a 20% or more of your fund that we will not start imposing rules on, other than what we call excluded investments. And excluded investments are obvious things like gambling, pornography, stuff in Russia, and so on, stuff that's sanctioned. It's a pretty obvious list. As for the regional focus, I mentioned earlier that we have what we call a greater intensity of support for organizations in what are called moderate or emerging innovator countries. MEICs, moderate or emerging innovator countries, are countries that are listed as such on the European Investment Scoreboard, which you can look up online. Most of Central and Eastern Europe and large parts of Southern Europe are on this scoreboard because it's a relative measure. It's about being in the bottom third or quarter. It's not about of the European Union. It's not about an absolute measure of advancement. And so when you are in one of those countries, or when a fund is in one of those countries, the way that we support them, normally we have a maximum of 25% of a fund that we are allowed to invest in under InvestEU. But if you're in one of those countries, that actually increases and it can go up to 50%. That's not to say we will invest 50%, but we are able to go further. So that's what we mean by greater intensity of support. So if you're tired, and that's not where the fund is based, it's where the fund's strategy is focused. So if the fund's strategy is focused on European Union countries in the Central and Eastern European bloc, the chances are that yes, you're going to be eligible for that. And we absolutely support. In fact, we're very keen to support regionally focused funds in those areas. This is one of our targets.
Okay, super, very useful.
Another point you mentioned is you're in the scale-up sector. So scale-ups and pre-IPO, there's two products there. So you would be under CMU, Capital Markets Union product, most likely. Because generally they have more generalist strategies, and we tend to sign bigger tickets under that product because the funds tend to have bigger sizes. And I would also encourage you to look at the Escalar product, which is significantly more complicated as an investment, but it allows the EIF, it breaks a rule. Normally we always invest pari passu, except under Escalar. Under Escalar, we are willing to take a lower expected return. So we reduce our expected return, but we take less risk as well. So we expect to get paid first if there's a problem. And so typically this is for funds that have that are creating a follow-on fund, which is going to take over a lot of their best investments. So the investments they're most confident in, the investments that are most likely to succeed that need additional growth funds and support. So there's a high probability of success, and we help those funds build themselves by providing greater returns, provided that the risk is low, greater returns to the other limited partners. And we're very keen to sell that product. We're quite happy with it, and we're trying to encourage people to take a look at it. I would encourage you to take a look at it.
So if I understand correctly, that's a form of a secondary transaction.
Not so much. I mean, Escalar doesn't require that they be secondary transactions. It just requires, it's just a product that allows us to take a different class of share. Provided the other limited partners are comfortable with a slightly higher risk, they will also get a higher reward. And we will take a lower reward because the EIF is not return oriented. We are politically oriented. So we take advantage of that. And there's a specific term sheet, Annex 3 of the call for expression of interest that is for Escalar.
Okay, we'll check that one out. Thanks a lot. Maybe just following up on two comments that you made. The first one was, again, geographies, and you mentioned that obviously we're talking about strategies and not fund domicile. But are there any requirements regarding fund domicile and let's say the legal structure of the fund? If we talk about, let's say, Luxembourg, where you have a few legal structures with different types of regulation, are there any preferences on your end?
Preferences, no. Well, at the due diligence stage, you probably want to be something that's reasonably traditional, so that it's easy to understand and you're not doing anything funky or strange, because that'll help you pass the due diligence. If you have strange structures with strange terms and conditions or governance rules, then that raises a flag and we have to examine it. That slows things down and it can be a blocking point. You have to have the fund incorporated in the EU, and the manager must be incorporated in the EU. The team does not necessarily have to be in the EU. So if we have funds based in France or Germany or the Netherlands, where a half of the team is in the UK. I've seen a fund with 2 managers in Singapore. That's okay. It's not ideal, but it's okay. It's not going to stop you.
Okay, and maybe in terms of specific structures, because I'm thinking about two, and they obviously have different fund expenses. So I'm trying to figure out if we can actually use the cheaper one. So have you worked with unregulated alternative investment funds in Luxembourg? Versus, I think what's the classical is the reserved alternative investment fund, the RAVE.
I don't know is the answer to your question, because I don't do the due diligences. So I honestly, I instinctively I want to say yes, but I wouldn't count on that answer. I would, if you like, drop me an email or put my email in the chat. I will follow up internally, and
that would be amazing. Awesome.
You can, and I will send you an answer.
Thank you.
Any further questions on InvestEU equity from the EIF?
So maybe if there's no one else that's eager to ask a question, I can continue with a couple more. If
Go
that's
ahead.
Okay.
Yes, please.
So you also mentioned tickets, and you've been talking about in terms of percentage from the commitments, but what about in absolute values? What are the kind of the ticket brackets that you're looking at, or ranges?
The rules are very clear. We will never invest less than 7.5% of a fund. We will never invest more than 25, 50, or 75 under different circumstances, typically 25, but then with exceptions. The maximum we will ever invest is 100 million euros.
Okay, very clear.
Very, very clear-cut numbers.
Yeah, absolutely. Thanks.
It has to be big enough to be meaningful. I think the main rule that I would point out, the rule that underpins a lot of our decisions, and I don't think this is a big problem in your region, but obviously we say no to a lot of people in France and Germany because of this rule, is that it must be additional. What that means in the EU context is that if a fund approaches us for investment and we look at them and we determine that that fund will raise the money without our help, then we're not allowed to help, because we're not there to just increase the value of subsidiary investments or to make things easier for people. We're there to move the needle. And so a fund with a first-time team in a moderate or emerging innovator country with, for example, majority women management, or that's investing in technology transfer, or any of these hot topic buttons for us, then we're very keen to invest, because we know that these first-time teams have trouble raising funds. We know, they still have to have experience, obviously have to pass due diligence, but if they're a newly constituted team, then we know that without a track record for that fund, it can be difficult. And in those circumstances where we think that our reputation will help them raise private money, we'll give them the money just to help them raise additional private money. And in some cases, we'll even become half of the fund, because we think it's going to be very challenging, but the fund is also very interesting politically for us to encourage and to support. So additionality is really something that blocks a lot of investments, because a big fund will come to us and say, this is our 7th fund, we're investing in ICT, would you invest? And the answer is no, we will not.
Okay, awesome. That resonates a lot, and because you mentioned first-time fund managers, and that's what we're going to be. And obviously, a big topic is track record. How do you assess that for a first-time fund manager that doesn't really have a track record, at least within the team together?
Yeah, we replace the track record of the fund with the track record of the individual members. And we examine whether those individuals have reason to convince us that they will be able to work well together. We then examine the strategy of the fund for how it's going to generate deal flow, because as you know, a fund is going to need something in the region of 50 to 150 opportunities for every investment if it's going to have a good choice of investments. And then we check the capacity of the team to analyze investments at that pace and at that rate. So can they source it? Can they analyze it? Are they competent to do so? And do the individuals have a track record of investment in previous employment?
Okay, and if the team composition is, for example, ex-strategy consultants and ex-investment bankers that obviously didn't have the chance to work on the buy side already, would that be, let's say, a knockout criteria?
It's never going to be exclusive. Nobody's going to exclude anything on the basis of just one piece of information in a discussion. You simply will need to prove that you have the competencies necessary another way. And one of the arguments there can be, so I see funds come through where there's limited experience at investment management. Zero experience is a hard sell, but limited experience at investment management, but compensated for by the fact that the people are extremely well connected in their industries. Some of them have run companies themselves or have been entrepreneurs themselves. Some of them have been part of transactions where companies were sold. And sometimes it's a question of those individuals having competencies for that particular strategy. So where a fund is going to be doing mergers of companies in an industry where they know that there's going to be a lot of consolidation, people that have been bankers and have been doing consolidation understand the value add, the synergies and that sort of thing. They have a definite exclusive and important value add for that strategy. So their presence is very much validated by the strategy. So it's a very much a case-by-case analysis. The eligibility criteria are rules-based and contractual, but the due diligence is much more human and case by case.
Okay, no, awesome. That's a great answer. Thanks. Maybe could we talk a little bit about the due diligence process itself in terms of the length of the process and what are kind of the key aspects of the diligence?
Sure. So when you apply to us, expect 6 to 9 months. It's just. It's not because we're slow, we're actually very fast. It's because there's so many people being diligenced at the same time and there's only so many people inside the fund. So we are spitting out a very large amount of investments every week. I sit on the deal allocation committee. The amount of money flying out the door is staggering, but the time to get to that point is long. After you apply, there's a certain amount of time before you get the attention necessary to kick off the process. So there can be a period of silence, followed by contact with the investment teams that will go through first screening, typically something written down. There may be, if it's a bit unusual, a request that you come to Luxembourg and present the strategy. Second screening that takes it a bit further and examines a little more how you fit with our current portfolio, whether or not this is an area of interest. Generally in Central and Eastern Europe, in key areas, that's not too much of a problem. And then some basic examination of whether your fund can do what it says, whether you're credible. Passing that will result in going into due diligence. That's much more involved. Our due diligence, the reason that we crowd in additional investment, the reason that the label of the EIF on your fund as a cornerstone investor is important and valuable is because everybody knows our due diligence is a little bit painful. And as a consequence, due diligence will involve interviews. It will involve a close examination of your strategy and track record. It's quite in depth. It'll try to make sure that it's a realistic fund, that you can work together as a team, that you have the necessary skills, that you're raising an amount that is coherent with the strategy in the region that you're going to implement it in, that you can generate deal flow. All of those things will come into play. A little less focus perhaps on profitability. We need to know that you will be profitable because we need to know you can attract other investors, but we as an institution are not profit driven. We like to avoid losses, obviously, and we're not there to lose money, nor are we there to help non-economic investments, but we're investing in private equity, so that's usually not a problem. But we are not obsessively focused on investing only in the highest return funds. And so that criteria perhaps is more important for the other limited partners. Once you've passed due diligence, there is a period of internal approvals and negotiations with you. Those approvals internally take a month and a half to 2 months, and usually we do that in parallel with the contractual negotiations with you, where all of the conditions, the minimum allocations, the excluded sectors, the rather heavy reporting requirements are discussed with you and put into a side letter. And typically the internal approval and the signature of the contract happen at the same time.
Okay, great. Thank you.
Thank you for the questions. I've sat in some of these Q&As where I've sat through 30 minutes of silence, so I'm more than happy to have you ask.
Okay, I can go on forever, I think so. So I'll just let other people ask their questions and then maybe I can jump in again.
No problem. Anyone else? Questions on InvestEU equity? Go ahead.
Okay, so one idea we've been floating around is because our group is quite well connected with the private equity and venture capital ecosystem, and we've been thinking about doing a combined fund, which has a small portion of capital allocated to fund the funds, and then a larger portion allocated to co-investments and direct investments. So in a way, we want to enhance our pipeline by allocating to funds, and you don't mention anything about fund of funds or secondary. So I wanted to ask if these are strategies that you would consider.
It's not excluded. My secondaries is a bit trickier, but there's the use of a fund of funds or the investing in a fund of funds is not excluded. Obviously, it has less critical value to us in that it doesn't have the origination, the generation of new opportunities, which is part of the political reason behind something like InvestEU. We exist to help worthy SMEs find financing by leveraging the skills of people like yourself. So I myself am not competent to pick, or at least in my current role, competent to pick investments. But I am able to motivate or to provide firepower to people like you who are hopefully competent to generate pipeline and then decide on investments. So we pure fund of funds that just invest in other funds. Well, that's what I am anyway. I'm a fund of funds. So we don't really invest in that unless there's a very specific value add. A partial fund of funds depends on what part, and it depends on what you're supporting and whether those funds are likely to be compliant. But it's not excluded per se. Anything that generates pipeline. You would need to discuss that. I haven't seen it before, so you would need to discuss that with the investment managers. I would remain open-minded. You might find it's a bit of a blocking point, but it might not be.
Okay, yeah. Okay, no, that was kind of my feeling as well. That it might be a bit exotic and a bit of a roadblock, but potentially
you need to always look at it in the perspective of what are we trying to achieve. We're trying to achieve investments in small and medium companies that generate employment, strategic autonomy for Europe, and the advancement of new technologies so that we're competitive. If it does that, if it generates these new opportunities, it brings money to those entrepreneurs, it supports those businesses and they're scaling up, which is very important to us as well, then it's likely to be coherent with InvestEU because all of the rules, no matter how complex, were designed to support that and to avoid wasting money on things that don't support that. So that the worst thing we can do is inflate the value of subsidiary investments just by pouring money into a pot that's already full. So if the strategy is coherent with that and you can articulate it well, then you will find that the people internally here will do everything they can to help you. And if something doesn't work because of the rules of the mandate, we will tell you and we will guide you around that to make sure you don't get stopped by it. Something I suppose is worth saying here is that we're not like a fund that you would normally apply to, in that if they decide they don't want to invest in you, there's no point in ever going to see them again. In our case, if you apply to us and it fails, and for first-time funds it often does, the right thing to do is to listen very carefully to the feedback, to reach out and get as much of it as you can, and then to wait 3, 6, 12 months until you've managed to incorporate that feedback into your business model and reapply. And there will be no black mark against you and no negative prejudice. We encourage people to reapply, and many of our investments are third-time applicants or second-time applicants.
Okay, understood. And is there a minimum cooldown period? Because if it's something like as small as eliminating the fund of funds portion, then
that wouldn't require. You wouldn't get rejected for that. You would get told just eliminate it before we reach the decision point, and eliminate it. You will be given plenty of time to adjust your offering before we before we make a final decision. It's only when that's not possible within a reasonable time frame. Like in some cases, people apply and we say there simply isn't the competency internally for you to be executing the strategy that you want. You need to hire two people with the following profiles, and you can't do that overnight. So you need to find good people. And so we'll say, apply again in 6 to 12 months when you've done that. And I've seen that happen. And then you see the internal approval document come through, and it will say these people applied a year ago. They did not have this or this. They have now hired these people. They have taken our feedback on board, and they now qualify. And that will be very explicit in the internal documentation. And that is why that fund's ability to take on our feedback, adapt to meet our criteria, is something we look upon very favorably.
Okay, awesome. That's great to know. And maybe one last question on my end, because you mentioned obviously the topic of other LPs. So I'm wondering, if we think about the classical LPs, such as fund of funds and pension funds and sovereign wealth funds, how do they view a fund which is anchored by the EIF? Do they think there are a lot of constraints, and maybe the goal of the fund would be more towards development and not maximizing returns? Is there kind of a thinking process?
No, because we don't ask people not to maximize returns. It just isn't one of the criteria. Well, it is a criteria we apply. We wouldn't want a fund that's not professionally run, because that would imply you can't get third-party investors. We are typically very well viewed as an anchor investor. However, when it comes to NPIs, sovereign wealth funds, and pension funds that are often government controlled, but there is a condition under InvestEU and under most of our products, which is a state aid criterion, which is what we call third-party benchmark investors. So I am going to have a very hard time investing in you if you do not have a number of private, profit-minded third-party benchmark investors. And that's because we need the funds to be commercial and to be market-based. And we can't have a fund that is 100% supported by public money, no matter where it comes from. So you will find there's this criterion: 30% of your investments, 30% of your funds must come from third-party benchmark investors. That means privately motivated, privately owned investors that are not controlled in any way by a government or by a state.
Any government? Sorry, any government, or just the local one?
Any.
Oh, okay.
Any. It has to be not public funds.
So that will be fund of funds, high net worth individuals, and family offices, basically.
That's all fine. Those are all fine. And pension funds that are not state owned are fine as well. There's private pension funds. There's no problem there. And that the 30% criterion can, under certain circumstances, first-time teams being one of them, be reduced. But typically, not to forget that our job with the 26 million we've been entrusted with, well, we have 2/3 of it. Our job with that money is to crowd in public money, not to just pour it into a fund. So we always look at what we call the multiplier. If I give you 20% of your fund, and that enables you to raise the other 80, which then creates companies that have additional investments from others, then I've created all sorts of additional private money flowing into both you and those other investments. And that is highly additional. It is very good for the European Union. It is exactly what we're supposed to do with this money. Whereas if I go to a fund and I invest 75% of that fund, and then they start buying 75% of every company they come across, then those companies are almost entirely subsidized. And that's not what we're trying to do.
Yeah. Okay. Got it. Also, no, I think that's everything on my end. Thanks.
Okay. Well, thank you for your questions. I appreciate it. Any more questions on InvestEU equity?
Maybe on the growth equity side in the pre-IPO, are there any kind of requirements towards the ticket that the fund will be signing? For example, let's say you're looking at 1 to 5 million euro tickets, more preferably than, let's say, 10 million euro tickets, or it doesn't matter.
So the tickets. So in order to invest in companies that IPO, you need to have the IPO product. The IPO product is our way of supporting the IPO ecosystem in the European Union. So we have this specific product trying to target funds that will support companies through IPOs, both pre, at, and post IPO. The one strategy we will not support is any speculative investments or any investments in companies that are only post IPO. So you can't just have a fund that invests post IPO. That's not good enough for us. But other than that, because we're trying to support companies that are trying to list. But we encourage people to continue to support the companies they've carried through afterwards. We don't want them to just bail out. The IPO product has as a condition, if we give you, say, 20 million for IPOs in Europe, then you have to spend at least 20 million in IPOs in Europe. You have to invest at least 20 million in IPO, pre-IPO, at IPO, or post-IPO companies in Europe, which is easy because you just have to invest in companies that have an intention of listing, a firm, clear, and declared intention of listing. there is no minimum or maximum ticket. We are not prescriptive about how people do these investments, and that's because the EIF is the whole purpose of the intermediated model is to leverage the expertise of companies that are or funds that are managed by people like yourself. So if the fund is a fund of experts designed to shepherd companies through IPOs, then one assumes that they're all competent for that, and that's the competency that we're using. So we're not going to tell them how to do their jobs. So you decide your ticket sizes, you decide what companies. We just have limits based on compliance and excluded sectors and things like that.
Okay, got it.
I have another question. Please go ahead. Sash, you're currently muted. There's somebody that's that has their hand up, but I can't hear anything you're saying, so you may be muted accidentally. If you have microphone problems, perhaps in the chat. I can't hear what you're saying, but you have your hand up twice, I think. Okay, well, in case you're having IT troubles.
Hi, Nicola. Ula here. I just logged in, and there is lots of happening in your breakout room. We are
More than usual.
Yeah. No, thank you very much. You're brilliant in providing the answers. I guess our IT experts or the whole backup colleagues, they've been checking, and the problem with the voice, it's not our side, so it must be with the two guests. Microphones.
Yeah, I think it's the same guest twice. This is my
Yeah.
email address, and I encourage you to write to me if you have a question. And I'm happy to answer by email. That's not a problem.
Thank you, Nicola. Because in any case, we will need to wrap up soon.
Mm-hmm.
Also, your time is precious, I guess.
Well, I set time aside for this today, so we're good.
Okay. Okay. Now, so then we can stay until they will close the breakout room, because it also has a time limit that it's open. But otherwise, participants, if you have questions, you can also write it in chat if you have mic problems.
My pleasure. This was the best breakout room I've ever had. I've, as I said earlier, I've had 30 minutes of silence before, so. You're muted, Ula.
I was also in the wrong room first, but there were only one question in our breakout room. So you're the champion now today.
Well, I think it's thanks to one person who's been very good with his questions. They were interesting, pertinent, and
okay.
numerous.
And lots of questions in breakout room number 4 as well on the EIC.
Yes, EIC always generates a lot of interest.
Yeah.
Direct investments,
exactly.
It's sexier than what we do.
Now you're much longer on the market. This is why more people know you, I guess.
Yeah. Yes. And a lot of ways, when you look through a database of European venture capital and private equity firms, you realize that about somewhere between half and 3/4 have an investment from us at some point in one of their funds. So yeah, we're very much omnipresent. I think that our internal database of investments is probably more accurate than PitchBook at this point.
I would say you're the cornerstone investor, basically.
Yeah.
Oh, there is one more hand, no?
Yes, but it's this. I think it's the same person twice. It's Sash, and then.
Okay.
I think.
Sash and R, if you have mic problem, if you hear us, can you write your question in chat? You have there also Nicolas' email address, or don't hesitate to send us questions via email that you got this morning, the program. That's also an option.
Although I must point out before you start using my email address that I do not vet or due diligence investments. I manage the mandate, so I cannot be your point of entry for your application. That has to be the website and the online application. I'm happy to help you through it, but I do not manage applications. That's the front office.
Of course. But they can also send questions to us and we will direct them properly then to you. That's also another option. Yeah.
Because we're so public facing in my department, we're used to rerouting questions internally to the right people. It's just that the front office is one of the busiest parts of the EIF, and they've got a pipeline of hundreds of deals they have to go through. So asking them for time isn't always easy.
Yeah, of course. Meaning time is precious. But I think time is precious also for you, also our participants. So I guess we can also wrap up this one.
Okay, well.
Yeah, thank you very much, Nicola.
My pleasure.
Thank you.
It was good to see you. Have a nice day.
See you soon. Bye.
Thank you. Goodbye, everybody.
Bye.